Good morning. Good morning. Apologize for the delay, but if you would like to trade and you understand why putting the macros first is so important, or maybe you don't, you came to the right place today. You came to the right place today because we are going to get right into it. Let me go ahead and share my screen. So I've not placed any trades this week at all. If we just take a look at the charts, I mean, 1 hour time frame this week we haven't had much to trade about, right? This is pretty much the price action right here all of this week so far. Um a couple thoughts on that, a couple thoughts on why. First off, I mean, the holiday weekend, we come off the holiday weekend, had this just drop here in price just off the initial market opened from the holiday weekend, and just kind of all the things that were, talked about during market close, mainly things going on in the Middle East, right? That's the main topic of conversation right now. And we talked about it a little last week, but just for a refresher, it's really just a domino effect of events that create the current climate we're in now, right? And so we can start it off by saying like this, right? So Middle East tensions escalate, Strait of Hormuz gets closed, oil prices go up because supply is restricted. First phase. It's the first event. That's what creates the cause and effect of that first event, right? Okay. Oil prices go up because the supply is limited. Oil prices go up. That causes inflation to increase. How? Marcus, how does oil prices cause price increase on goods and services? Because that's what inflation is. Inflation, the rise of inflation or the fall of inflation is simply just a change in prices. So how does oil impact that? I understand why the price of oil is impacted, but I don't understand how the price of oil impacts other prices for goods and services. That's a fantastic question. And you're asking yourself the right question. The answer to that question is, think about it like this. If you're a business and you pay, let's just say for easy math, $1,000 for iPhones, right? We'll just say that $1,000 for iPhones, right? And that $1,000 for iPhones gets you 100 iPhones, right? You sell those 100 iPhones for, let's see, $100 each. Sell for $100. You get 100 of them, right? Let me make sure that's more than 1,000 because we need to be doing good math here. Should be 10K. That's what I thought. So you make about 9K profit, right? Okay, now let's input this current scenario where oil is restricted, causing other prices to go up elsewhere. And so because you get your products from, let's say, Japan, right? Japan needs oil. They don't produce their own oil at all. So they need oil, right? They need oil for their own economy. So whatever's restricting them from growing, from making more money, to spend more money, to make more money, that flywheel is going to impact them, right? So because oil prices are higher, that same $1,000 that you spent to get 100 iPhones from Japan, now you may be spending that same $1,000. However, you're only able to get 85 iPhones now or 75 iPhones now. So what do you have to do as a distributor in your business, people that provide products to the marketplace, right? You have to increase the cost of those products, or you have to or pay Japan less, right? But there has to be some, because right now you're paying the same amount of money to get less product, which means you're making less money, which means if you're making less money as a business, you're retracting, you're contracting, you're not growing, right? You're not con- you're not able to hire, you're not able to produce more products, right? So the first phase is straight up where moves gets closed, oil gets supply restricted, prices go up. Prices go up, impacts prices for goods and services. So now we have an inflation problem. Now we have an inflation problem, right? We have an inflation problem because prices have to go up elsewhere because it costs more to do the same amount of business, right? And so once that happens, the Fed, their two main things, the Federal Reserve, and what they do is price stability and maximum employment. I'm gonna unshare my screen just so I'm like full face because I want you guys to hear me. I'm still looking at the chart that starts happening. I'll pull it up. But Fed's the dual responsibility, price stability, and maximum employment. So this is when the Fed comes in when inflation is not out of hand. They're involved during both scenarios. But in this present scenario, the Fed with their dual mandate, price stability and maximum employment. So this is a price stability issue when inflation is out of hand. This is a price stability issue. So that now they have to think about the Fed is going to weigh the risks, right? You'll hear this when Fed Pal talks about weighing the risks, right? So there's a risk of the and what are they observing? The two mandates, maximum employment and price stability. So whatever impacts employment, maximum employment, they're going to weigh that risk, and whatever impacts price stability, they're going to weigh that risk, right? And so in the current climate, we have the risk on our price stability side. That's where the weight of the risk is. It's not really in the labor market. The labor market's been steady. It's been neutral, right? Um and before this happened with the Strait of Hormuz, the Fed wasn't really even considering cutting then, even any more than one time this year, because not much contraction was happening to where the Fed didn't need to stimulate the economy, right? That's the Fed didn't need to stimulate the economy. We're getting some movement now. I actually like this sell. And let me tell you why I like this sell.
Order filled.
That. Let me tell you why I like this sell. 150. Okay, I can reach 150. I like this sell because in the current environment, there are I mean, how I'm thinking about this, there's one or two things that can happen, right? Like, we got Trump talking later today at 8 p.m. I originally thought it was 8 a.m. Maybe it is 8 a.m. Um, I don't know if you guys saw it yesterday, but it was, I'm gonna look it up right now. Deadline for Iran versus US. I don't know if he said 8 a.m. or 8 p.m. President Trump has extended deadline to cut a deal. Okay, so 3 hours ago, let's see. Oh, 8 p.m. Trump gave an ominous warning to capitulate Tuesday, 8 p.m. Let's see. I want to see if he did extend it beyond that for another 10 days to April 6th at 8 p.m. So yeah, 8 p.m. today is pretty much the deadline to figure out to remove all the uncertainty. That's what happens. It's a deadline to remove the uncertainty. Um, I like to sell because if inflation is continually going to rise, and so if we don't get a resolution for the oil conflict right now, and inflation continues to rise, yields will continue to increase as well. The cost of treasury yields will rise, right? Which will the demand for the dollar will go up, um, and the demand for gold will go down because gold is not a yield bearing asset, right? Now there is a scenario where gold also continues to rise. I feel like, and it could also rise in this same scenario because of it being a hedge against inflation. Um, and so that's kind of the two mediums that we're playing with right now. And something interesting that I thought about yesterday. I don't know why I started thinking about this. I think I was thinking about physics and principles, and I love principles because they don't change. Right? They're consistent. They're consistent no matter. It's like SGA. I've been consistent my whole life. Right? But like that's what they are. They're consistent. And so I was thinking about trading and how in everything, they're like there's two sides to everything all the time. The law of polarity exists in everything, in everything. And so I was thinking about it in the light of trading. Every time you take a trade, there's always rationale for a buy or a sell. Like always, there's always rationale for a buy or sell, right? Like that's something that we could agree about. There's always rationale for a buy or sell, and the reason I say that is because the law of polarity. The law of polarity states there's into for every action there's an equal opposite reaction or opposing action. For everything there's an opposite. Everything has an equal opposite, right? So the same rationale for a buy setup has an equal opposite of this rationale for a sell setup, right? So I thought that was interesting. I thought that was interesting when I started thinking about that. I'm looking for something right now. Um, I don't know what I did with it. Oh, I know where it is. Right, I found it. But the law of polarity, right? So there's that's why I never like assume like we can never assume that we are going to be correct, right? We simply have to, and once we understand that, I think it'll help you think in probabilities. Once you understand that the law of polarity does exist, I think it'll help you think in probabilities because then you aren't you know there's no guarantee, right? You're gonna take the trade that's in line with your edge. You're gonna take the trade that follows your edge. You're gonna take the trade that puts you in higher probability scenarios. You're gonna take the trade that follows the macros, right? That's what you're gonna do. You're gonna do those things. But even when you do those things and it doesn't work, why? The law of polarity. Simply put, because there's two sides to everything. There's a reason that the sellers won at that time or the buyers won at that time, right? So I encourage you to think about the when you're thinking about, man, how do I hear it all the time. I hear it all the time, thinking probabilities. I hear it all the time, but how do I actually do it? Start thinking about it in that way. Start thinking about it in that way. So that's what I was just thinking about there. I was like, man, that's actually super fascinating. Um, if you think about it. So now we're getting some staggered movement. So I like to sell mainly just because of the current climate we're in right now. Climate could change at 8 a.m. or 8 p.m. Well, it's probably 5 p.m. Mountain Standard Time. That climate could change. That climate could definitely change. I'll be looking for opportunities this evening for sure. Um, I love the way gold's been moving, evening and overnight as of late. Of course, not right now at this current price action, but I do love the way it has been moving. Um, we've honestly been stagnant. We've been in this range for a minute. For a minute, made a strong move up after that drop. We actually filled some imbalance. I saved it to show you guys, just because it's just beautiful. Like I like when things work out like they were supposed to, right? I just like that. I mean, who doesn't like that, right? But to me, trading is simply about identifying patterns, which are formulas. And so once I see those formulas fulfilled, it's fulfilling. Like, to me, when price moves to a decision making level, that's simply just like it's just a pattern. That's a formula for why price moves to levels like that, right? Like, I'm not sure what it looks like in terms of like actual like written formula, but when I say a formula, I mean it's supposed to do this, so it does this, right? Like, it does what it's supposed to do. That's what a formula is. It does what it's supposed to do. And so look at this imbalance fill right here. So this imbalance fill was created on, let's see, this seems like that's all of my imbalance. It's not all of my imbalance. This imbalance was created on March 18th. March 18th, right? And so when we talk about, oh man, I can go through so many angles right here. When we just talk about understanding the cyclical nature of price, identifying imbalance is essential because it also allows us to understand the game of probabilities as well. So I mentioned the law of polarity, helping us understand how to think in probabilities. There's two sides to everything. Everything has a positive and negative. There's a bullish and a bearish side. There's a good and a bad side. There's a fun and a boring side. There's a hot and a cold side. There's a wet and a dry side, right? Like, there's two sides to everything, right? There's a flat and a rough side, right? And so when we talk about imbalance, this also helps us think in probabilities, because when price is not moving in the direction that is supported by the fundamentals primarily, because we believe at Bloom, which is why I absolutely love the way we approach the charts. And I wish that we were around when I was starting trading, because we put the macros and the mindset first. Macro and psychology, right? Macros and the mindset, we put that very first. And then we get to the technicals, because the technicals are the easy part. Th- That's the part that makes it fun. The macros and the mindset is the part that makes it clear. Okay. And so that's why I love our approach, because what this imbalance allows me to do is understand when the market is not moving in the direction that the fundamentals are telling it that it should move, are supporting that it should move. Because that's the thing, just because it doesn't move in that moment doesn't mean that those same fundamental variables won't eventually move price, right? But what it says is, when price is not going in the correct direction, we'll call it quote unquote correct direction, we'll say in line with the fundamentals, when price is not moving in line with the fundamentals, we can use areas of imbalance as target areas for trades or potential points where we just want to document a win, right? Sometimes I don't trade all the areas of imbalance that I create, but I like to see them get filled. I like to see my approach be validated. And I think that's the thing, guys. It's super important to realize and understand you don't have to trade every opportunity. Trading isn't the only way. Executing trades, pressing buy or sell isn't the only way we develop in trading, right? If you're watching the live market, the only way, y- if you're watching the live market by pressing buy or sell, isn't the only way to get a win, right? Isn't That's not the only way to get a win from that trade by pressing buy or sell. You can get a win by not executing. You can get a win by seeing what your setup would have resulted in if you would have taken it, right? You can get wins in different areas. So I love to see this imbalance fill, partial fill, right? We got a partial fill right here. Then price sold completely off for like almost 2 weeks, a week at least, from the 19th to the 1st before price began pushing back up on the 23rd. But it didn't take it. It took until the 1st for it to get to this area of imbalance, right? Okay. So it moves to this area of imbalance. And where did it stop? Where did it stop? I'm not going to say where did it stop. I'm going to say where did it have some where was there an opposing force pushing against it, right? Right at this 1 hour decision making level. This is what people call resistance, right? I call it an opposing force because we call these decision making levels force fields and magnets. It's an opposing force when price is close to it. It's an attracting force when price is away from it. Okay. It's a closing, it's a, what did I just say? It's a wow. Opposing. There we go. I knew I was gonna find it. It's an opposing force when price is close to it. It's a attracting force when price is away from it. So if you think about the entry I just took just now, why did I take that entry? Because we just broke my 1 hour decision making level and then my confirmations came in. So we broke that decision making level on this candle, but my confirmations weren't in yet. My confirmations weren't in here. My confirmations came in on this candle. So I took the entry because my technical confirmations came in first. But I did my other checklist first. I thought about the macros and I'm thinking about my mindset, understanding the probabilities, measuring my risk, right? Accepting the loss, right? Accepting the result, accepting the outcome, simply just following my process, waiting for my trade, right? And then I execute. The technicals were the very end of that process, right? But I'm taking this trade, and that is why my stop loss comes right here at this 1 hour decision making level, right? Because it's an opposing force. In this case, it's an opposing force against sell pressure or against buy pressure, excuse me. So if price comes back into this area, let me find my where is my toolbar? Thank you. Found it. If price comes back into that area, the opposing force of this 1 hour decision making level, I want to see prevent it from going through, right? I don't mind it coming up here, but I want to see that opposing force because we've already broken it, right? Let's say this happens, we go above. Now it's an opposing force in the sell direction, right? Is that I hope that makes sense. I wish I could ask you if that makes sense, but that should make sense. Just think of it. When price is close to this decision making level, it's an opposing force. So just on the other side of that, when price is further away from a decision making level, that decision making level acts as an attracting force. Okay. So this is acting as a attracting force. And then when price gets down here, what's going to happen? This is going to act as an attracting force. And this is going to flip to an opposing force, right? So you don't need to think about, okay, if it breaks this, then this flips to resistance and or this flips to support, or I mean resistance, or I mean support, or this. You don't even have to go and you know drive yourself crazy thinking about that. Just two things you need to think about: is it acting as an opposing force, or is it an attracting force? That's how we determine support. That's how we determine key levels, right? We can start getting into other stuff too and connecting these key levels to institutional numbers, right? Institutional numbers are what pension funds operate at. They're what universities operate at, right? They're what large people managing some money, right? That's where they're operating at institutional levels, right? And then we can also think about how they operate when it comes to news. We can also think about how they communicate with imbalance, right? We can start thinking about those things, but that's the first thing I want you guys to take away from this live session today. Some mark key levels, three candle structure is an opposing force. And you know, if even if you don't even use the three candle structure, stop today trying to figure out what is support and what is resistance, and just think about, is price closer to this force or is price further away from this force? Those are the only two things. That's it. That simplifies everything for me. The three candles. Now, maybe that doesn't, looking at it that way doesn't work for how you currently mark up your charts. I don't know. I've never tried it on other ways to mark up charts in terms of that thought process, but I know it works for the three candle structure. I know it works. Right. And so, yeah. So that's why when I'm looking to take this sell, I'm seeing where my area of invalidation is. It's this 1 hour decision making level. If we break that, we break it. I cut the trade. I cut the cord. I take the loss. I wait to get back in. I wait for the next opportunity. But I think we'll play in this range for the rest of today, until 5. I think this is the range we're playing until 5. We tried to get a push to this decision making level yesterday. So these areas of liquidity, I'm observing that we could go collect. We could go collect on this money down here just from this sell off. But like I said, today is just waiting for 5 p.m. right? We're waiting for 5 p.m. to see what happens. Or leading up to 5 p.m. we could get some update before then. Doing a durable goods orders, which is the change in the total value of new purchase orders placed with manufacturers for durable goods. Then we have core durable goods, which excludes transportation items. And so we want to look at core durable good orders, because that doesn't fluctuate the pricing. The reason there is two separate ones is because transportation makes the number skewed, like inflates it. You'll see that with like even like core CPI and CPI, even with like down here, right? Even with core retail sales, right? Things like that where you see a core, that's because there's another of a similar data read, a data variable, macro variable where there's something involved in it that could inflate prices. That doesn't mean it does every single time, but it just means it could inflate prices. And I'm actually seeing that OPEC members are actually meeting. Wow, and 11 other oil-rich nations. Interesting. I wonder how that's going. That started on April 5th. I wonder how that's going. Um, but yeah, we do have this so about a 0.5% increase. Last month's number was actually revised from zero point 0.4 to zero point 0.3. And then we got a 0.5% increase, which was zero point 0.3 higher than what was expected, what the market anticipated. So, thinking about what we talked about earlier, change in the total value of new purchase orders placed with manufacturers for durable goods. Okay. That means somebody on the other side of that is placing those orders with manufacturers. So the other people on the other side of it, businesses, right? And so the reason I say that is because that means that is where the price increase comes from, or the inflation starts to potentially show itself, because this isn't a change in the total value of new purchase orders. So if the total value of new purchase orders has gone up by 0.5% since last month, that price increase comes from somewhere, right? It's a leading indicator of production. Rising purchase orders signal that manufacturers will increase activity as they work to fill orders. Now, that could or could not be true. They could currently have the same amount of orders. However, the value is increased because of inflation. And that is because of oil and because of the restriction in oil supply right now. See how that chain reaction, right? That chain reaction. That's why I love the macros, because it's a chain reaction. You can't fake the forces of the fundamentals. You can't fake it. And there's and this is why I love getting into like debates with people about trading and sports betting, right? Because with sports betting, you're playing you, you not even to talk about like relying on the athletes to do something, but you're playing against the house. Unless you're on one of those prediction markets, which the more popular those prediction markets get, in my opinion, the less credible they become, because centralized institutions and entities will always find their way. They always find their way. They've done it. They're doing it with crypto. They always find a way. Um, and so the prediction markets, I won't apply this to prediction markets, but to everything else, the bet GMs, the FanDuels, the ESPN bets, right? Like all that, you're betting against the house, right? So I'm not playing. I'm playing against somebody. I'm playing a game that somebody on the other side is trying to win in a different way than me, right? So they may not want to win, or they can't win if I win, right? This the zero sum game. People think trading is a zero sum game, and trading is not a zero sum game. I'm not taking money from you. Like on this sell right now, like Q, if he's up trade right now, Q didn't lose money because of this trade, right? Because I took this trade. Q did not lose money because I took this trade. We don't have the power to do that as retail traders. So I can't stand when I hear that it's a zero sum game, because I never see any competition on the other side of this, right? Like it's different with sports betting. Sports betting, you're playing against the house. You know you're playing against the house. That's what gambling is. When you go to Vegas, you're playing against the house, right? And so why am I saying that? Because with trading, the fundamentals are what Everybody's looking at. People can have different indicators. They can have different technical indicators. They can have different ways to mark up their key levels. They can have different ways to mark up imbalance or liquidity. They can have different ways for all of that. But the constant in trading, in yeah, we'll talk about in trading. The constant in trading is the fundamentals. You can't fake this. You know what I'm saying? Like, you guys understand what I'm trying to say? Why I'm trying to show you why the fundamentals are so important. And it's like a hack, it's like an edge, like a secret. It's like a speakeasy. Bruh, yo, the fundamentals are like a speakeasy because they're there. They're there. You just gotta find them. You just gotta find the relevance. It's hiding in plain sight for you, right? Maybe that wasn't the best analogy. I was just thinking about it hiding in plain sight. But anyways, that's why the fundamentals, guys. The fundamentals. You have to understand the macros. You have to understand the fundamentals because this is what it creates, right? When you understand the law of polarity, there are two sides to everything. Okay, so that means when I think about the fundamentals can support both sides because there's two sides to everything. So we can probably figure out some fundamental factors that support gold being bullish in this current moment. When I took this trade, at the very moment I took this trade, we could figure out some variables that support that went against this trade from a fundamental sense because the law of polarity, it's the law of polarity. There's two sides to everything, no matter what. We don't get to pick. Like, that's why I love principles. We don't get to pick what they apply to. They apply to everything. Literally. From the most extreme to the least extreme. Right. And so when we think about it in that light, okay, and then we think about, okay, if the fundamentals are the force that moves the market, right? I want to trade with those forces when they are the heaviest towards whatever asset I'm trading, in this specific example, gold. And before I continue, I'm going to hit this BE right here and I'm going to allow this trade to break even. My take profit is this 15-minute decision making level. So we see we're about $80 away. Yeah, I could have closed on that $80. But also want to make sure that I am not operating out of fear. And when I have price correcting against my entry, that I'm not just collecting my profit just because I'm losing money. I'm giving money back to the market. Um, Depending on where my target is from my entry, I'm okay with break even. Like, I'm okay with seeing this go all the way to my level or hitting break even, right? I'm just okay with that, right? Because I want to I want to see those points of affirmation for how price communicates with my decision making levels, and depending on how much I have at stake, the opportunity I have at stake, I will either let that play out or I'll collect. Like, if we were $80 away and I was $500 in profit, I would have collected when we started getting strong retracement against this force field. All right. And so continuing on what I was saying, I was talking about the fundamentals. I was talking about, in this current example, when it comes to gold, and I was talking about the macros. What was the last thing that I said? If you can help me out, if you can help me out in the chat, whoever is watching right now, you can help me out in the chat to remind me what I said before. I talked about my trade and hitting break even. I know I was talking about the law of polarity when it comes to the trades, why the macros are so important. And so I think I was talking about it in this example for the trade that I'm taking right now on gold. If I apply the law of polarity to this trade, but I wanted to I want to close this up by shining a lot of importance on the macros and the fundamentals, because I have the choice to take a high probability trade or a l- lower probability trade, and I can do so by trading. I can do so by understanding how the fundamentals are weighted to whatever asset I'm trading, in this case gold. So when it comes to gold, what currently right now is he- oh, this is so good. I got to wrap this up. I got a meeting this morning, so I need to make sure I'm there on time at work. But watch this, right? Watch this. So I'm going to share two current fundamental factors that impact gold in the bullish way and in the bearish way. And then we're going to say which one is heavier right now, right? So you have war, right? War, uncertainty, fear, right? That is what creates a bullish environment for gold. That creates a bullish environment for gold. But then you also have policy, right? Which creates a bearish environment for gold. Right now, policy is weighted heavier than war, because war is causing policy to be restricted. You see what I'm saying? The whole reason why policy is tight is because inflation. The whole reason why inflation is high is because of oil. The whole reason why oil is high is because of war. We remove the war aspect, we remove the oil problem. We remove the oil problem, we remove the inflation problem, right? And you see how those dots connect, right? And so if there was no inflation problem, then yields could or then rates, the Fed could cut rates. Maybe we need to create some growth from our economy. Then the Fed would cut rates. If the Fed would cut rates because there's no inflation problem, the Fed cuts rates, gold rises because now rates are lower. So the opportunity cost, get familiar with that term, the opportunity cost of holding gold isn't as great than it was if yields were sitting at 5%, right? If yields are, 1.2%, 1.5%, right? The opportunity cost for holding an asset becomes less because yields are risk free, right? That's the important thing to understand about opportunity cost, about yields. They're risk free, right? Um, so biggest takeaway that I want you to have today is thinking in probabilities. What allows you to think in probabilities? It's understanding a principle that is built into the fabric of the world in everything. Literally everything you can think of, every decision you make, there is another decision you could have made. I was thinking about this last night. I'm gonna end with this. I'm gonna end with this. 1 second, baby. Daddy's finishing up. Okay, 1 second. You want to open your applesauce? Let me see how I open it. You want me to open it? Let me open it. Let me see. Okay, you got it. Never mind. All right. I was thinking about this yesterday. Every decision you make, there's a decision that will move you closer to your most desired outcome or further from your most desired outcome. We can, for simple terms, we can call these good decisions or bad decisions. Every decision you make, you're either making a decision that pulls you closer to your desired outcome or further from your desired outcome because of the law of polarity, because there are two sides to everything. Like, really think about that and try to go about your day to day. Think about that. Like, dang, I'm making a decision right now. It could be as simple as something as drinking a sip of soda. Two sides to that sip. Buttercup. Two sides to that sip you're taking there. And I'm not judging. I do drink soda sometimes as well. Right. But I know in that moment that I'm doing something that isn't necessarily the best for me. Right. And so we need to get in the habit of making those decisions and having them on automation, the decisions that pull us closer to what we desire. That is where that is the objective for me. It's to reach a level of automation when it comes to making decisions that pull me closer to my desired outcome. Thanks for watching today. Don't forget to hit the subscribe button if you have not already, and make sure to turn on notifications. We normally put premieres up for any of our videos that we post, and so you'll be able to see when they go live. Q will be live on Thursday. And then there's one more thing that I wanted to say, but the train has already left the station. And so I'll save it for next Tuesday. Maybe I'll save it for the chat on Thursday. Other than that, you know who I am at this point, so I'm not going to say who I am again. But I hope you guys have a wonderful rest of your day, and I'll see you next Tuesday. Peace out.